What's going on, family? This is not financial advice, man. Do your own research, man. We're gonna be checking out these charts today, going over the trades, and I want to point to some possible bangers that were actually green today. So we're gonna just get started. So this was pretty much the price action today. Pretty much nothing going on. A lot of sideways action, a lot of chop, and this is where I drew my trading range. Um, this morning, prices opened 9:30. They spiked up. I kind of just went in this congestion range up here. As you can see, the market is up 0.38%. So they were down basically, and literally at the end of the day, they rallied all the way up back to the top of the range in the last 10 minutes, last 20 minutes of the day. So overall, this was a kind of a tricky day, I would say, because it was kind of a bullish imbalance until later on in the day. So that first arrow was a second entry long failure on a smaller time frame, but once I seen that rejection bar, they could not reach the top of the range. I knew they were going to test the lows, so I did get that first trade, and this is where the spike up happened so fast. There was really no way to get in that because I was short, obviously, but there was really no way to get into that. There really wasn't too much of a pullback. They just kind of spiked up real fast. So we got a breaking a new high. They finally came back up later on in the day. That was around 11:30ish, 11:20, something like that. I seen a rejection bar. They finally touched that, the highs of the day, and I got short up there and wrote them down. What kind of made me take profit early was because they didn't reject off that area. It was kind of slow and choppy, so it was definitely a corrective move. So I thought they were going to make a new high or attempt to go back up there. So I took profit on the fourth bar, the end of the fourth bar and the breakdown. I just took profit because it was moving too slow. So I just took profit. They chopped sideways. They did try to attempt to come back up there. They gave you a lower high double top entry, and they came all the way back down and fell out the bottom of the range. So I thought that was it because I did have a swing play in on the VIX, but they forced me to jump out because they hammered up literally at the end of the day and spiked all the way back up. So once I seen them coming back up to the halfway point, I just closed out those two trades that I had, the swing trade positions. But not much going on today, man. Just a lot of sideways action. I expected a bounce, but I didn't expect them to hold this area. So we'll see what happens tomorrow. You know, we got some more numbers coming out Friday, so expect some more volatility. I'm expecting maybe some continuation for tomorrow. I don't really know exactly where they're going, but I'm expecting some continuation for tomorrow. So we're gonna see what happens. Yeah, man, that's pretty much all I got for the price action, man. A lot of garbage. I do got a video. I got some bangers I want you to check out. So check this out.
Crickets, because boring is beautiful. That is right. Take a look at some of these so-called boring stocks posting exciting returns this year. Grain company Archer Daniels, IT service provider Jack Henry, Hershey, Merck, General Mills, the company General Mills, all with solid gains in 2022. So is boring your best bet? I'll go to our own General Mills. Jeff, what do you think?
Yeah, I think it sort of is, and it's been that way for a while, just looking at relative performance in the broad market. I like a stock like AutoZone. I think I've talked about it before, but you look for good charts in tough markets, and I think this is one. It's been in that nice, steady uptrend, holding above the 200-day. You can't say that about a lot of stocks. I think the earnings growth holds up relatively well compared to a lot of other companies. I think people are looking to fix rather than buy cars right now, trading at a market multiple. So I think you stick with this boring one.
Karen, how about you?
Thank you for coming to me in a boring one. You know, like, I will go to Karen on that one. So mine is CVS, and you all know CVS from the local drugstore, right? But they are also CVS Caremark, which was pharmacy benefits, and then Aetna. So they're in the insurance business. They're in managing insurance, even if you don't insure, if you're not insured by them. Now they have the Signify deal. So they're building out a very comprehensive healthcare structure. And yet, the stock, I think it's just under flat for the year. And it's not expensive. It's like 11 or 12 PE. It pays a 2% and change dividend. And it is a steady, nicely growing company. They earn mid-single digits operating income. And it's just a safe, boring place to be.
For the record, Karen, I went to Jeff first on this segment.
Okay, sorry, Jeff.
Bonawyn, where would you go here?
Boring is in fact beautiful, and I'm going to stick with Coke. I think that's pretty plain vanilla as it comes, but I really want to emphasize this because we talk a lot about meme stocks and everything else that's very popular, high growth, and all these high flyers that have all these bells and whistles. But part of your portfolio needs to be in low beta. I think this is about 50. Half the beta, 0.5 beta, strong free cash flow, dividend yield. These are names that, I mean, it's barely up 2%, but if you look at relative value versus the index, that's really where the money is made there. Plus 2% versus minus down, 17% or so. I think this is a winner and the type of name that you should be looking at. Now, at 24 times, it's not exactly cheap vis-a-vis the market, but I would expect that multiple to actually increase.